Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olszewicz, the head of research at Valkyrie, and let's take a look at the midweek market update. Going to lead with the usual, are we still correlated with legacy question? And for the most part, I'd say yes. We've attempted a few decouplings here and there, but ultimately any rises in legacy are essentially enjoyed by crypto as well. Even though the most recent volatility, Fed hike announcement, continued hawkish Fed, that sort of stuff is most likely going to continue to stay correlated and coupled until it doesn't, right? So just keep that in mind. Something a lot of people are watching. I don't see as many people talking about it anymore, but it's definitely still very much an ongoing process in that regard. Flipping gears to on-chain metrics here, you don't have to get too complicated with it. You know, is there activity? Is there not? Is activity rising or declining? Are people using the network? What's the network doing as far as transactional activity, right? Just super basic questions that you can sort of investigate. So I like to look at transactions and active addresses. This is Bitcoin, 7-day moving average, not a lot of, we'll say, continuous robust activity here on the transaction front. Part of that being a lot of Bitcoin, a lot of older Bitcoiners, such as myself. I don't personally transact frequently on the network. I don't need to. For me, it's a store of value. I don't move Bitcoin around frequently, right? With ETH, that's a little different, and that reflects a little bit differently on on-chain metrics. So that's important to understand. It's also important to know that with things like batching of transactions or layer 2 activity like the Lightning Network, we may see fewer transactions on something like Bitcoin that has options and opportunities to make micropayments, for instance, elsewhere, right? This doesn't tell you the size of transactions, doesn't tell you fees, doesn't tell you any of that. It just says how many transactions happened today versus yesterday versus tomorrow, right? So transactions are rising slightly, but again, it's nothing that really sticks out at you. Ultimately, though, what didn't happen as compared to 2018 is we didn't see this massive cliff of activity. We still have this baseline activity here. This drop here, this precipitous drop, was largely correlated with Bitcoin miners. So there was a large amount of sort of Bitcoin activity, Bitcoin mining activity, or any mining activity on a proof of work chain baked into these on-chain stats. This is active addresses or addresses that have moved in value over the previous day. And again, you're not seeing mega robust increases here, right? We're just seeing baseline activity. We're not seeing mega declines in activity, much like we did. Again, this was mining exodus related as well as price. And this as well was very much price related, very much just exhaustion of retail, exhaustion of everybody sort of involved for the prior 2-3 years. You can see the euphoria in the on-chain metrics, even along with price. So we're definitely far, far away from euphoria in on-chain metrics as far as that's concerned. And we're just seeing this just slow, continuous grind of activity. It's a bit noisy. You can zoom in and out on this, but if you look at the 30-day active addresses, it doesn't really tell you too much other than people are still here, right? There's still stuff happening. So at a baseline, it's good to see that. Now we can go a step further and look at, of the coins that are moving, how old were they when they moved? So how old were they when they last moved? And then on top of that, what is the value of those coins sort of on a relative basis? So if we look at the coins that have moved in the past 6 months, right? This is continuously declining as a percentage of total coin on the network. So coins that have moved in the past 6 months is certainly at a relative low. And again, you can see these highs sort of creep in. You get a ton of on-chain activity as a percentage of total coins on the chain at all-time highs in price, right? A lot of people are moving a lot of coin around for all sorts of reasons, mainly to sell, but you have a ton of buyers coming in, a ton of sellers, right? There's just a ton of activity in the ultra near term, and you can see these crazy spikes in activity. This is 24-hour spikes, right? 1 day to 1 week spikes in the pinkish slice here. So you get a ton of new entrants, old entrants selling, right? Just a ton of churn on chain. And clearly we are not seeing that here, right? We are seeing consolidation, holders are holding, dormancy, however you want to think about this, we've yet to see a bunch of people get excited to sell, right? This isn't the type of price action or price environment where you're going to see that. And that's certainly reflected in the on-chain data here. So something you might see if price starts to creep up, which I think it will, is you might see activity like this creep up. You'll see on-chain activity creep up. You'll see coin transfers creep up a little bit. And the network sort of comes to life a little bit more as price comes out of this consolidation period, at least in Bitcoin's case. Here's mean hash rate, which is essentially sitting at all-time highs. I think as global energy issues continue to emerge, you're going to see more shifts in where miners are, for what reasons. They might get regulated in certain countries heavier because of energy concerns. There was an EU vote on a proof of work ban that didn't go through, so it got voted down. But the energy conversation is going to continue forever, right? Until we see a greater and greater push towards understanding and education about where this energy is coming from for Bitcoin. A lot of it, especially in the US, is clean energy. Most of it's clean energy. Certainly not the case globally. Globally, it varies, but in the United States, definitely cleaner than dirtier, let's say. But nevertheless, hash rate still increasing here on a total basis. We can also look at miner wallets, which how much are the miners holding, right? They're the natural sellers, as some people call them. They convert energy and hardware into BTC and can then potentially turn that into USD or whatever dollar denomination they prefer. And they aren't offloading a bunch of coins here, at least by the looks of things. Now they have more complicated funding agreements now that allow them to sort of borrow against their holdings. So this signal kind of has decayed a little bit over time. But even still, you're not seeing, miners capitulate here. You're not seeing miners concerned with price action up here at all. Bitcoin and all exchanges, another really good metric, sort of inverse of supply demand, right? When Bitcoin on exchanges is extremely high, you could argue, okay, there's more available supply. And when Bitcoin on exchanges is low or declining, there's less available supply, right? That's the first read. And then how does that look against price? Well, we find that if supply is rising, price probably has a harder time rising with it. If supply is declining, price probably has an easier time rising. That's just, supply and demand type of stuff going on there. But here, we're seeing less and less coin on exchanges, which is certainly tipping me towards a more bullish bias, whereas coins getting offloaded onto exchanges would tip me into a bearish bias. For ETH, it's essentially more of the same. ETH's going to have more just baseline activity. They have a lot of DeFi related stuff going on, NFT stuff going on, transaction counts, weekly average, flat essentially, but ultimately holding at the previous all-time high, which again is incredible. No matter what you think about this or how you want to slice this, activity is just holding steady at this level, subtly rising here week over week. But it's holding steady at levels that it hit exuberance. This is the ICO craze mania bubble, and you're still seeing that activity on DeFi. So unlike DeFi, or unlike ICOs rather, DeFi has brought people here and kept people here, right? This was clearly very much just speculative mania price-wise. And it only makes sense that when you have this baseline activity, price is higher than that level previously. Same thing with active addresses. Active addresses starting to break out a little bit here, week over week, month over month. Starting to see rises in active addresses on ETH. So that's certainly more bullish than bearish. Balances on exchanges for ETH continuing to hit lows here. And because of DeFi, right, there's really very little reason to keep your ETH on an exchange unless you're using it as collateral or selling it or lending it, right? But in DeFi, you can oftentimes put your ETH to work. And I think you're seeing that in this exchange balance visual, right? If you can earn a yield on ETH, why would you keep it on an exchange, So this will probably continue to decline until DeFi type of rates are available broadly on exchanges, if that ever happens, right? But that's something else to consider here. And again, I would be much more bearish if I was seeing ETH getting offloaded onto exchanges, right? This was post ICO mania, and you had all these ICO treasuries just dumping their ETH on exchanges, dumping nonstop, right? And then in late 2020, we sort of flipped that switch. DeFi kind of took over. 2021, all sorts of other off-exchange facilities to use ETH, and all of a sudden, ETH on exchanges comes tumbling down. Something else that's good for ETH is to see TVL rise, and this is all TVL on all chains. TVL just means the amount of money sitting in a smart contract. Now, some of this is certainly appreciation of the underlying, as in ETH price goes up, of course TVL goes up, right? Or Solana price goes up, TVL goes up in USD terms. This is just a way to normalize it between all the chains here. Nevertheless, TVL is at a 3-month high, 4-month high. This was what, January 21st? So it's been quite some time since TVL was at this level, and this is a good sign. Again, not all of this activity just up and left, right? They being DeFi participants decided to stay, decided things might look bearish, but we're not going anywhere based on what I'm seeing here, right? So as a measure of just baseline activity, certainly more bullish than bearish. And as far as market structure goes and sort of derivatives, options, futures, calendar, that sort of thing, we do have a big expiration for futures and options coming up at the end of the week. This is Deribit. They're one of the largest options platforms, if not the largest. I think they're maybe even larger than CME as far as options are concerned. But it's just a good idea to see where are the puts and the calls. What are their expirations? What are their strike prices? And if we look at open interest by expiration, we can see around 3 billion with a B in expiration on March 25th. And for ETH, you have roughly 2.1 billion in expirations. So that's going to have an effect. It's going to have an effect on volatility, intraday volatility. And it's just something to consider, right? This isn't necessarily bullish or bearish, but it's something to look at and watch for and to understand exists. Because if you see all this crazy volatility at the end of the week and you don't know that, oh, all these contracts are forcibly closed at a certain price, right? Then you're kind of missing the picture here. ETH also has some crazy strike prices of 50K, which is interesting at the top end, and BTC, I think, what is it, 400K at the top end, right? And this open interest just tells you how many calls or puts are at that price. So there's a substantial amount of calls at 50K and 60K currently on Deribit. Switching gears to technicals, I'm going to say a lot of the same analysis I've given the past couple of weeks. Not much has changed. Thankfully, the analysis has been more right than wrong as far as that's concerned. We've held the lows despite Fed raising rates, despite what's happening in Ukraine, despite any other potentially bearish type of events. Price has held these levels quite well. For BTC, it's still well within the 2021 range, still well within the multi-year range expectation based on a pitchfork. So if these lows hold, you'd certainly expect at a minimum that we start to traverse towards this median line here, this yellow line, assuming the rate of change it continues, right? Just as we explored the top end early 2021, we explored the bottom end-ish beginning of this year. Return to the mean in this case would be basically all-time highs. No guarantee, obviously, but if this rate of change is maintained, that's where we can expect to go. If we look at the 2-year MA multiplier, this dates back pre-2013. And as with any technical analysis indicator, I put it on a chart. Does it tell me anything, right? Does it give me a signal? Was it accurate at all? Does the back testing make sense, right? That's a perfect question to ask. So the point of this is to show you where the market may indicate overbought conditions and where it may indicate oversold conditions. In this case, I think it fits pretty well in that when we are below the 2-year MA moving average, it tends to show you oversold conditions, whereas being above the 5x multiple of that MA tends to show you overbought conditions. We didn't quite get there in 2021. We almost got there. We grazed it with a wick maybe. So at that time, I certainly read it more as these grazings in 2017 than being mega oversold or mega overbought, right? And you could argue that maybe because we weren't as overbought in 2021, we may not show those signs of being mega oversold here in the current range, 2022. So all of this consolidation in 2021 allowed this MA to sort of catch up to the price. It also allowed the top end to rise, keep rising, right? Currently that's around 160 plus. I don't know if it's going to get there, right? Who knows? But until it's above that level, according to this indicator, that's where overbought conditions can be found. And we can do this for ETH too. ETH, you sort of have to bump it down a time frame. So this is the daily 365. So the yearly, basically, MA, the 5x multiple. Again, does this thing know that the DAO got hacked down here? Does this thing know that ICOs went crazy? No, right? It doesn't know any of that. Does this thing know that ICOs sold off? Does this thing know that ETH testnet merge got completed for proof of stake, right? The indicator knows nothing. All it knows is math. And it's potentially signaling that if this gets above 3450 in ETH's case, it might have a run, right? It says, hey, trader, this is looking like it's oversold. It's in oversold territory based on this MA. And if you're a believer in back testing of this, which it's loose, right? It's not perfect. It's not as clean as Bitcoin is, but I'd say it looks decent enough to pay attention to. Then, we might get a bull run out of this after all, if ETH can pull up above 3450. Ultimately, though, I tweeted this out earlier today. I've been talking about this for weeks on BTC. We had this is BTC on the right, ETH on the left. We had this failed inverted head and shoulders basically everywhere. BTC had it, ETH had it, shoulder, head, shoulder, inverted head and shoulders. And if you've never heard of any of this, you're thinking, I'm crazy. That's fine. All I'm looking at is fractals and historic back testing of how they play out, right? So since that failure of that inverted head and shoulders, we've had this formation of another type of chart pattern called an ascending triangle. Currently, the key resistance level, the key breakout level, the watch is at 45,000, 44.5K, somewhere around there. ETH chart looked slightly different in that it has this diagonal resistance, right? Nevertheless, both of these are looking increasingly like they're ready to test those resistance levels. So on a technical basis, I do like bullish breakouts for both ETH and BTC. And when things reverse trend-wise, it's good to pay attention to the relative pairs as well. So we'll look at that in a second. But for targets, I like 51, 50K, somewhere in there for BTC. I like 3,500 at a bare minimum for ETH. And you may see some extension of that to 42, right? I don't know what's going to happen. I'm just looking at backtesting of these fractals. I'm just measuring the depth basically and projecting it higher. Certainly not trading advice. This is ETHBTC. ETHBTC also has a type of double bottom called an Adam and Eve VU shape here. The key level on ETHBTC is 0.073, potentially projects to basically 0.08. So if ETH were to outperform BTC, that's where I would expect it to go on a relative basis. And we can go down the line here, look at BNB USD as well, just sort of down the market cap list, right? This also has a triple bottom. This is also starting to make higher highs. It also was painting bullish divergence where you see a series of lows with less and less momentum. So it just tells you there's probably bearish exhaustion here. The sellers were not able to push this lower as the buyers stepped in, and supply demand sort of hit an equilibrium at that level. So most alts fit into this camp and look decent. Solano, this is the 12-hour 365 MA, so it's the 183 MA. You have to move this around depending on how much data is available. Solano only started trading in 2020, but even still, right? Triple bottom, telling you it's probably more oversold than overbought, certainly, and really may not even start a run until maybe 170. I don't know, but it's certainly in oversold territory here. And we can look at Solana on the cloud with RSI, again, bull div, triple bottom, all good things you want to see for a potential trend reversal. TK cross here on the cloud. Solana target 160, right? This is just a 50% retracement here. So all these coins, no matter how you sort of look at them or care about them, are looking like they're in some decent shape. Here's Sol against ETH as a relative pair. This isn't screaming bullishness or reversal to me, but something to watch on a relative basis. Even something like NEM, which Valkyrie has in its treasury management portfolio. NEM also has triple bottom bullish TK cross, right? NEM's bullish territory is above 14 cents. But ultimately, the analysis of all these coins is essentially the same right now. DeFi perp as well. Again, triple bottom, bull div, mean reversion is playing out currently. I think last week I said if I had to make a trade on the DeFi perp, it would be a long. I didn't, but that would have worked out, right? And the reason I said that is because of bullish divergence principles, bearish exhaustion principles. Then lastly, again, if you want to look at relative pairs, DeFi perp, which is a fabricated index on FTX, where it looks at the highest market cap coins in DeFi and includes them in an index like Uniswap. So this is against BTC, and you can see it's basically made no ground against BTC since 2021. Just sort of been in this very large range. So things are certainly looking bullish on the TA front, maybe not so bullish on the humanity front, but I like where we're headed into the final weeks of Q1. That's all for this one. Like, dislike, comment, share, subscribe. Let me know what I missed. Let me know what you enjoyed in the comments below, and happy trading.